Do you know how much of your income Social Security will replace? Well, if not, you can end up coming up short in retirement. And that's what we're going to be talking about today in our financial freedom video. So definitely stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. Now, Carson, you stated that understanding your pre-retirement income is one of the most important aspects of your retirement income planning. Tell us why that is.
Yeah, I really do. This is probably the most critical aspect of what we do for our clients, Andrea, because you have to know how much of your pre-retirement income that you're going to be able to replace. And unfortunately, so many people do overestimate what Social Security can do in that regard. Now, if you've overestimated what Social Security is going to do for your retirement income planning, and you've also come to realize, because you didn't get proper advice along the way, that you've overestimated how much money you have saved and also how long that money is going to last for your retirement, you're going to end up having to make some compromising decisions, perhaps like working longer, or maybe you have to downsize, not by choice, but by necessity, or you may end up taking on more debt than you need to because you just don't have enough money to make ends meet. So we don't want you to do that. So we are going to be talking about today how much income replacement Social Security really can do for you, because it varies depending on your income level. But before we do that, there are 2 rules to retirement income that we would like to give you. And Andrew, what are those 2 rules?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
Okay, so let's go ahead and jump into our lesson today to talk about the income replacement factor when it relates to Social Security benefits.
Now, Carson, Social Security benefits are an important source of retirement income, but you state that they shouldn't be your sole source, right?
Absolutely not. Social Security should not be your sole source of income. And I think that most people understand that. But unfortunately, Andrew, studies show that Social Security is the main source of income for many retirees. But here's the thing. If you're relying on Social Security as your main or primary source of income, many studies are going to show you that it's not going to be enough for you to maintain the type of quality of life that you may want or that you may deserve. Now, what most people come to grips with is that they hear this rule of thumb that Social Security makes up about 40 to 50% of most people's income. But unfortunately, that's the averages. And a rule of thumb is just what it is. It doesn't mean that it applies to everyone. So what we're going to do is show you a nice chart that's going to allow you to see the percentages of how much Social Security is going to make up if you're in a different tax bracket. Now, if you go ahead and take a look at the chart that we have up for you right now, you can easily see that in different tax brackets, Social Security is going to make up a higher percentage of that replacement income. So for someone who was maybe making around $25,000 a year, when they get their average Social Security benefit, Social Security in that income tax bracket is going to make up approximately 53% of their income. Now, as you move up that ladder and you're making around a little over $53,000 a year, Social Security is going to make up around 40% of your income. Now, as we move up the chart and you're making over $86,000 a year, you can clearly see that Social Security is going to make up a significantly lesser amount of your income, only 33%. And for those of us who may be in a much higher tax bracket and making over $130,000 or more per year, Social Security is only going to be making up around 26% of our replacement income. So we need to be aware of these numbers and understand where you are so you can be making important decisions on how you need to be approaching your retirement income planning goals.
So Carson, let's say conservatively that Social Security will only be replacing people's income between 35 to 40%. That's just not going to be enough income. So how are they going to compensate for that?
Yeah, that is absolutely correct. And that's why we do these types of videos, so we can help educate people and let them understand that from my vantage point, I clearly know this. And from my client's vantage point, we have provided them with the information where they clearly know this as well, Andrea, as you know. Now, here's how you can really compensate for it. This is very easy. You have to save early and you have to save often. Because if you can do it early enough, you can build up the resources to where perhaps you don't even have to rely on the government program at all. Now, I want to talk about a simple example here. And I've already done these numbers because we have a 401k calculator, and it's very unique, and we can help you understand exactly how much money your 401k may be worth when you retire. So I want to talk about this example here. Let's take a 25-year-old person. 25-year-old who's only on the lower end of the spectrum that we talked about when it comes to their Social Security benefits, replacing approximately 53% of their pre-retirement income. Let's take that individual, $25,000 a year they're making. Let's just say they're going to save 10% of that income. They're being smart. They're going to put away at least 10% of that income. They're going to put away $2,500 per year. And let's say their 401k is going to match them up to 5% of that income. That's another $1,250 that they're going to be putting away. From the calculations, if that 401k was earning 6% on average, and that particular person had a retirement goal of retiring at perhaps their full retirement age at 67, that 401k will be valued at over $681,000. Now, if we're talking about income distribution rules, the most common rule that a lot of us as financial advisors will formulate our distribution strategies around is the 4% rule. So if you're taking a look at the 4% rule, this particular individual from that amount of savings could be able to live off of $27,000 a year just from their retirement savings for the next 30 years of their retirement and not risk running out of money. Now, that's actually more money than that person was making while they were working. Now, of course, we're keeping it very simplistic. Yes, that person probably could have had some income increases. We understand that, and hopefully they would have saved more as well. So it's all relative to the conversation. But if we're just keeping things very simple and level, we understand that if this person could just save money early and get to their retirement in that manner, they wouldn't even have to think about Social Security being able to replace 53% of their income in order to survive. They would literally have enough money to continue the same exact lifestyle that they were used to while they were working. Now, I also took the liberty of looking at maybe what would a higher income person doing the exact same thing, how those numbers will look in their 401k. Maybe someone making $150,000 per year. Exact same numbers as far as what they're putting away, 10% of their income, and of course the company matching 5% of it in a 401k plan. At 25 years old, if you're able to make that kind of money, then you're very lucky. I definitely understand that, but there are some 25-year-olds who are able to make that kind of income. But if you're able to do that and you save consistently that early, well, guess what? Your 401k by the time you retire at 67 will be valued at over $4 million. So you wouldn't have to think about relying on Social Security at all when it comes to your retirement income. These are the type of things that we help our clients get to. You can do it if you have income and you also match that with some retirement goals that a financial advisor can put into perspective for you. You can significantly neutralize the fact that Social Security will not be enough income for you to live off of in your retirement years.
All right, Carson, so what's the moral of this video?
Yeah, the moral of this video, Andrea, is that if you want reliable income and not have the fear of coming up short in your retirement years, never solely rely on any government program. Make sure you put that into your hands to make sure that you have the significant resource that you're going to need to retire. Thank you for tuning in to our Financial Freedom video. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.